The markets are at a critical turning point. U.S. stocks remain in a strong long-term uptrend, but rising Treasury yields and uncertainty around the Federal Reserve are creating short-term pressure. The S&P 500 is still holding near record territory, while the Nasdaq remains highly sensitive to interest rates. The VIX is around 15, showing that investors are not in panic mode yet. But the biggest risk right now is the bond market. The 10-year U.S. Treasury yield is around 4.7%. If yields continue rising, high-growth technology and AI stocks could face significant valuation pressure. Now let's look at Bitcoin. Bitcoin remains much stronger than the traditional market. Spot Bitcoin ETFs have recently recorded major inflows, including more than 600 million in a single day. That's a very important signal because it shows that institutional demand is still strong. Ethereum is even more aggressive. ETH has posted a powerful rally, while Ethereum ETFs are also attracting significant capital. So, is the crypto bull market back? The answer is possibly. But the next few days are critical. The biggest catalysts are the Federal Reserve, inflation data, the PCE report, Treasury yields, and Nvidia's upcoming earnings. If inflation comes in lower than expected and the Fed turns more dovish, we could see Bitcoin breaking above $80,000, Ethereum accelerating higher, and another strong rally across technology stocks and major cryptocurrencies. But if inflation surprises to the upside, Treasury yields rise, and the Fed becomes more hawkish, both Nasdaq and crypto could face a sharp correction. My current outlook: U.S. stocks 7-10 bullish, Bitcoin 8-10 bullish, Ethereum 8.5-10 bullish, altcoins 6-5-10. The 5 indicators I'm watching most closely are Bitcoin ETF flows, the 10-year Treasury yield, the US dollar, PCE inflation, and Nvidia earnings. If at least 4 of these 5 turn positive, the probability of another major move higher could increase significantly. The next big move may be closer than it looks.